Okay, hey everybody, Dan Fitzpatrick here, stockmarketmentor.com. Okay, the market's pretty crappy today. It's been crappy for a while. It seems to be kind of the theme of the year so far. You can see here with the SPY, January, oh, happy day. February started off and then the flipping wheels came off the wagon. So, where are we now before I get back to the stock that I want to cover? We are in bounce territory. Not really sure I'd call this a dead cat bounce. Let's just say we got a big, massive sell off, horrible close on Friday. It's like the only reason the S&P closed where it did was because the closing bell rang. Otherwise, we'd probably be down to zero. So it was a really, really brutal close. And then it gapped down this morning even more just to continue this because of, well, the market gaps down because the market gaps down. People say, oh, it's because of the tariffs. Uh, Maybe it is, maybe it's not. It's my feeling a lot of that stuff's already factored in. But still, we got a really nasty move here. But here's the deal. You can see this green line here. I think I had this drawn for a while now. Yeah, just last week. But this is where the bounce occurs. And so what do we do now with this? First of all, if you were short, you need to cover those shorts. I'm talking about if you're short like the S&P or the Nasdaq for that matter. You really need to be covering your shorts because I think the next move is probably going to be up to a certain extent. But there are kind of two questions when you're looking at something like this. First is this done going down? And my answer would be, yeah, at least for now. That could change tomorrow. It could certainly change later on in the week with the jobs numbers coming out, because that'll definitely impact what the Fed's planning on doing, and I should say what the market believes the Fed is planning on doing. So that could move this lower. But for now, the path of least resistance is up. However, that leads me to the second question. The first one, again, for those of you that are not taking notes, is this done going down? The answer is yes, at least temporarily. The second question is, since it's done going down, is it going to start moving up again? How high is it going to go? Is this going to be a big move? And for that, my answer would be no. I don't think so. I think we're kind of trapped in a range here for a while. And so, what I would suggest doing is look at this, realize we're in a range. This is not your daddy's market when stocks were just going up. This is something different. And so, you need to treat it as such. That is why you want to be in stocks like Alignment Healthcare. This is one of the only ones, at least that's been on our active trade list. This is one of the only ones that's actually been working. We're doing okay on this. We've got a decent profit, not a huge profit, but it works. I think we're up around 10%, something like that. And in this market, I will take that. So here's the thing: a lot of our people are in this stock, and I'm trying to coach them how to hold it. And the main deal is watch the 8-day exponential moving average, because that is really what that's really what defines support here. The stock hasn't really even come down to test the 8-day EMA. So I would use that for a short-term trade. I would use that as my reference for like a stop, and I wouldn't put it precisely just below that because stocks don't trade that orderly. But just generally speaking, if the stock continues to close above the 8-day exponential moving average, I think you're good. But for longer term traders, I think you got to look at the weekly chart here. With I'm just looking at this picture. I haven't really seen that kind of chart before. I mean, stocks that do this tend to continue doing it. And this has been doing it for a while. But my suggestion is if you're long this stock, just stay long until you see some kind of big reversal on high volume. So far, we're not seeing that. on this weekly chart. So just stay long, just relax, stay cool. Don't overthink this deal, but also don't overtrade. This is a really brutal market right now. And what I don't want you doing, I'm just telling you, I don't want you over trading. If you're if you don't know your numbers, if you don't know what the R value is on the trade, if you're even scratching your head wondering what is an R value, is that anything like R. Kelly? No, it's not. But depending on what it is, it could be just as gross and obscene. So you need to understand this kind of stuff so that you understand your trading. You can check out what I'm doing at stockmarketmentor.com, or you could just blast over to tradetrack.com, and that's without the C, TRADETRAK.com. I would have had the C in there, but that domain was already taken. So anyway, you could check that out. And what I'm talking about is checking your numbers, knowing where you stand on your actual trading. Because with that said, if you are a numbers cruncher like I am, if you see your trading start to fall off, then you need to get off. Okay, don't keep trading and trying to turn things around. Let the market turn things around instead. Trust me, you'll make more money, you'll lose less money, and you'll sleep better, which is always at a premium in my house.